Good morning and happy Friday, traders. It is 8:01 a.m. Chicago time on Friday, the 28th of April, 2023. Thanks for joining me today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, I always say from Chicago because I recognize that I don't live in the city that's in the center of the universe. So I'm sure I recognize that it's evening or nighttime or very, very late or almost next morning for you. I don't know. So I'm including that. So don't want you to think I'm ignorant. This is episode number 2458. Here's the pre-market summary sheet as it stands today. This is the Convergent Trading pre-market summary sheet. We have very slight risk-off sentiment, risk-off sentiment this morning across the board. The market had run quite a ways. It has pulled back quite a bit more than I had anticipated actually in the overnight session. Pre-market today, yesterday we got some key releases, if you recall. Let me run through here. Yesterday after close, we got Amazon, T-Mobile, and Intel as the key players. Capital One, Mondelez, Gilead, Amgen, Snap. And then this morning, pre-market, we're getting ExxonMobil, Chevron, Sony, Charter Communications, and LyondellBasell Industries. Nothing major after the close. Yesterday, we saw a continued pop across the board as Amazon reported a 9% increase in sales, I believe is the right number. And then this morning, the big ones, the big kahunas, Exxon is up, has surprised by 9% to the upside, came in at $2.83 versus $2.59 on $86 billion in revenue. And then Chevron on their tail beat by 4%, came in at $3.55 versus $3.41 on $50.793 billion in revenue, and so on and so on and so forth. We are in the thick of earnings season here. So earnings are in focus. U.S. officials reportedly coordinate urgent rescue discussions for First Republic. Nobody's stepping up to buy up this bank stock. It's just seen as quite toxic. With a private sector solution looking more likely. Mixed European GDP and inflation data, U.S. PCE and employment cost index data slightly higher than expected. So the data, a summary of the data that came out this morning, which is really important, is that the consumer remains resilient and inflation remains hotter than desired. And this is this number is an important input for the Fed. And so the market kind of wiggled around and started to break through to the upside, but really not that much action in the overnight session. Amazon earnings strong, but warned on AWS slowdown. Bank of Japan kept the YCC unchanged, but withdrew forward guidance that promised to keep interest rates at current levels or lower levels. Looking at across the board, Bank of Japan rate decision remained in line. Yep. GDP growth out of France came in at 0.8%, expected at 0.3%. Pretty good. That's year on year. And Q on Q, 0.2 versus 0.1. And anyway, I won't go through all this stuff. Chicago PMI expected at 945. Remember, this is a private number. Comes out at 942. To subscribers, the expectation is 43.5. So you may see a flutter at 942 Eastern and then hear the number at 945. Then we're getting consumer sentiment final, which is not as important as the prelim. The expectation on the final is 63.5. The inflation component is at 4.6%. and then we get the Baker Hughes rig count after the close, and that's it. Turning our attention to the S&P. The S&P has a double distribution profile, multi-distribution profile, really good volume, 239,000. The inventory is 99% short, meaning that 99% of that 240,000 took place below yesterday's close. The range is quite normal for the overnight session recently. 24, 25 points is where we've been. The point of control is a lot higher than where it was yesterday at 41.40, and we are just kind of tackling the same prices over and over and over. So let's take a look at the charts. So if you recall yesterday, I did a tweet on it. So this is from yesterday's video. I took this off of yesterday's video. Yesterday's video showed that really our most important test is going to be to the 35 level to the upside. Beyond there, we have this MC point of control at about 54, 41, 54. But the expectation is that we would really expected the action to make it so that the 41.10 breaks. So it's better for us to look at this on this chart. Now remember what I said. We opened Tuesday, tested up, broke through the 35 here, right? To the downside, broke through the 35, and ended up closing at the low. Very decent and clear trend down on that day. And then the next day, we opened, checked higher, pulled back, and then we ended up finishing at the lows, but we spent most of the session accepting these higher prices. And then the next day, we were opening in the middle of balance here with the NQ having an inside day and being pretty strong. I had talked about the expectation that this 41.0975, and by the way, if it's really hard for you to see, if it's not, the screen in front of you is not clear, I am broadcasting in 1920 by 1080 resolution at 60 frames per second. It should be not crystal clear because there's a lot of compression that's being done by YouTube on the stream, but be sure to go down to the bottom here. I'll show you. So if you're looking at the YouTube stream, I'm just pulling this. Be sure to go here and make sure that this says HD so you can see what I'm talking about more clearly versus a bunch of fuzzy numbers and none of it makes sense. Make sure that that little cog at the bottom right of your YouTube screen shows HD in white on a red background. That's important. So the first test that was important yesterday that we discussed at length is to take out the 41.10. If it takes out the 41.10, it ends the one-time framing down, and it's likely to squeeze right through the single prints into the 41.16 is what we talked about, and then the 41.35 becomes my key target, and then the key magnet is right where it settled to the tick. 53.75 key magnet, and then this morning, and you'll notice that quite a bit traded up here. So we'll look at the volume profile. Quite a bit traded up here, but what this does, what this says to us, the narrative that's being created here, is that we've been in balance for the better part of well, we've been balanced for April. And then we broke below balance and then finished, ended up going back into the range. And in doing so, we are back in complete balance now. This is not ideal for day trading opportunities, okay? I could see the rally yesterday from a mile away. We talked about it before the market even opened. I could see that coming. That's clear. But the rally is problematic in that now the market just gets back into balance, and then we end up where we've been for the last month, which is just chop back and forth, really slow type of action. And this is not what's ideal for us to get opportunities. We want the market to reprice. So we ended up cleaning some of these structures down here, not entirely. We traded right into this low volume node, but we're back in balance. So this is kind of disappointing that we are back in the range. I mean, fact is the market does what it's got to do, but you can see that we're back in the square and we're right back on top of that point of control. So it is, it took out the 4110, this band. It went to 4135, this band, and it went right back to the magnet, the key magnet, which is a 4155, 4154. And this morning we're off of the magnet a little bit, but the magnet's also the mid-century figure, so it's expected to be choppy today. That's what I'm seeing. We did have some poor structures yesterday, so if we go back to the TPO chart, let's go back to that. Now let's zoom in. You can see that there was no value yesterday, even though the software is seeing this as value because it's taking the POC right there closest to the center of the range, and it's distributing these TPOs until it gets 70% of the range. But there is no such thing as value on a trend day, so there is no value. But what we have, you can see here, are these multiple single print structures below. This is a weak structure, and so any news whatsoever that this thing cannot handle, it can really drop right back into that 16 area. So to me, if it doesn't hold, if it's not able to hold, 16 becomes the next key price to test. We just get right back down because of this really poor structure up here. If it pushes up into the 4150 and then it just kind of sits sideways, rotations are equal up and down, volume is shrinking and is sapped out of the action here, you're looking at a choppy close into Friday and not much more the market will do today. And you're better off just saving your money and your effort and starting your weekend early, okay? So here it is. We had nice distribution here. We have point of control, and then we took off right from the point of control and shot into the composite point of control up here. Very, very classic auction market action. Very methodical, but not easy to trade. Yesterday, the setup early was the pullback into the mid and VWAP, and then the second setup was right here, which I think John talked about. John, one of the mavens at Convergent, the break of the IB high pullback long. Once the 4110 is taken, we know that there's strength. And now the market is showing us that buyers are in control. And so now we want to trade the pullback, and then the stop for the pullback is this zipper up here, not the low down here. And you just hold tight for 4135, which would have been filled here. And then the next area to gun for is the magnet right up here. And those two got done. I know a lot of people were short yesterday and fought this, but I can't help you in that there's no problem. I'm not going to judge the short here. What I'm going to judge is taking the short and then defending it. That's something I'm going to judge. That's always going to cost you your lunch. And for many people who were just kind of thinking the market is going to sell off for some reason, even though the NASDAQ showed really a lot of strength on Wednesday and was quite strong yesterday. I don't know why people expected the market not to rally back into balance. I mean, it broke into balance. What other thing do you need to realize that, of course, it's much more likely, anything can happen, but it's much more likely to run through the range right back to the balance point, and that's exactly what it did. Went right back to the balance point. This is what the market is supposed to do. Breaks back into the range, ends the one-time framing, and now it goes right back to where there's balance. Okay? Very, very common. So that's where we stand. Again, for today, not much to offer you here other than to say that it's very likely to take out this high. We expect the high to be taken from yesterday. By the way, the point of control shifted to the top of the range. The point of control yesterday is right at the top of the range with a weak high. So I'm expecting it to go and challenge this this high that we left up top yesterday at 57.50. So I expect the 57.50 to be gone, but I'm expecting it to do a lot of this today. So just be cautious. Make sure you have your risk controls in place and trade from that perspective. One thing I forgot to do here, it is, where are you from Friday, right? We do this about twice a month. Please take a moment to type in your city, state, country, and if you want to be contacted by someone in your area, put in your Twitter handle or Instagram or Telegram or whatever you want, and then folks can get a hold of you. Please do not put in your email address or phone number. These will get farmed and will get harvested, and then robots will just bother the crap out of you. Okay, back to business. Let's take a look at what the NASDAQ is doing. Again, the NASDAQ inside day started strong. Very nice little pullback for the NASDAQ. I mean, how beautiful is that low from the NASDAQ before the run up? The NASDAQ's much stronger. The NASDAQ now holding a trend line across the top. It is above its magnet. It's above its MC point of control, and the NASDAQ looks like a high probability breakout. So it's very likely to take the 13,300 over the next several sessions, if not today. I don't know if it'll do it today. Let's look at crude for a minute. Crude has just slipped. It is balancing out yesterday, and today it's opening on the high side. Crude is very likely to rotate back up to where? To our 77 from below. So in order for crude to, with confidence, continue to move lower and get down to these meaty, low structure prices, it's very likely to check to see if there's any interest from buyers to take this back above 77. So I'm expecting crude to drift back up towards 77 before the next leg. That's where that stands. And then the Russell, really valiant effort yesterday by the Russell, but it's still just absolutely, slow. And it's way, way, way behind. The Russell should be, if it was equivalent to the others, the Russell ought to be at 1,800 today, not still dragging at 1755. It's just, it did not get its rally. It did not push back towards the meat of its balance up here. The Russell 2000 is just not getting any love from investors. Good luck today, and I'll catch you on Monday morning. Take care.